Sentiment on Wall Street depends on a variety of factors: standoff between OPEC and the United States, signs of a recession, and the cooling down labor market. Investors are seeking catalysts for optimism, which could be found in a fresh statistics. InstaForex analysts are ready to share their market review and the forecasts. Yesterday, Wall Street indexes wavered between gains and dips, but eventually closed in the red, having lost gains from a two-day rally. The benchmark indexes finished another volatile session with the following results. The Dow Jones shed 0.14%, the Nasdaq was 0.25% down, and the S&P 500 lost 0.2% to close at 3,783 points. The New York pre-market does not suggest any growth. The key stock indexes traded deeply in the red, extending their losses. Nevertheless, they revealed fragile optimism in the early session, trading mixed. The S&P 500 is expected to trade in the corridor between 3,710 and 3,830 points today. The hawkish Fed and the red-hot macroeconomic data made the stock indexes gyrate. The ADP employment report showed that the U.S. private sector created 208,000 jobs in September, a bit higher than the consensus of 200,000 new jobs. It was the second report compiled according to the new ADP methodology. As usual, it prefaces the official non-farm payrolls. The ADP data led investors into the wait-and-see mood. Investors gave up their attempts to look for a reversal in the Fed's rhetoric. OPEC and its allies also added up to the overall pessimism. On the one hand, the cartel decided to cut the oil output by 2 million barrels per day from November, and the decision is bullish for oil stocks. On the flip side, investors revised recession fears because high energy prices might derail industrial production and dent corporate profits. The pre-market confirmed mixed sentiment on Wall Street. A weekly update in the U.S. unemployment claims suggested some snags on the labor market. The number of first-time jobless claims grew by 28,000 to 219,000 last week, following a 5-month low recorded in the previous week. The last figure is way higher than the expected 203,000. The report means a cooling down in the labor market, which could give investors faint hope. Despite considerable changes, this does not shed light on employment. Whereas jobless claims rose, the report on vacancies showed less active hiring. Besides, the ADP report and the services PMI revealed stronger data than expected. And in this context, the government employment data will be crucial for market sentiment. According to the consensus, the U.S. public and private sectors could have added 250,000 jobs last month. It could be the weakest growth in 2022. And the jobless rate might remain flat at 3.7%. Market participants should also adjust their trading decisions to the inflation data, which is due next week. The annual US CPI is expected to ease for 3 months in a row. Though it remains at elevated levels, the market foresees as an 80% chance of a rate hike by 75 basis points at the Fed's nearest meeting on November 1 and 2. Tesla stock dropped 1.1% in light of the news on the Twitter deal. Apollo Global Management and Sixth Street Partners, which were looking to provide financing to Elon Musk for his proposed $44 billion buyout of Twitter, are no longer in talks with the entrepreneur. Tesla shares regained losses in the early New York session. The currency market is also trading under high volatility today. Major currency pairs are trading actively. The US dollar is regaining its footing and its index settled above 111.50 points, having climbed 0.5%. The intraday corridor for the index is seen between 110.90 and 112.30. Despite uncertainty and the mixed data on the labor market, the US dollar asserted strength and maintained the ongoing uptrend. The market considers the ADP upbeat data and the stronger than expected ISM services PMI to be the sign of further aggressive monetary tightening. Fed's policymakers who spoke yesterday again confirmed the Fed's commitment. Raphael Bostic said that the Fed is still at the early stage of its fight against inflation. He also advocated for a rate increase to 4.5% by the year and even for an emergency rate hike by 125 basis points. Today, the US dollar could find support from remarks of more Fed's policymakers: Christopher Waller, Lisa Cook, Loretta Mester, and Charles Evans. The USD CAD pair is trading higher on the back of a drop in oil prices and the firm US dollar. The currency pair has approached 1.3700. It's about to surpass this level, and the intraday corridor for the instrument is between 1.3640 and 1.3740. Returns on the Canadian dollar are lower than the highs of June because investors expect a softer stance from the Bank of Canada amid worsening economic conditions. The economic calendar reminds traders of the IB PMI for September and a speech by Bank of Canada Governor Tiff Macklem. These events might influence the USD CAD pair. Tensions in the commodity market are putting pressure on the loonie. The White House is inclined to relax some sanctions against Venezuela to caution Americans from overpriced crude. The news appeared after OPEC and its allies neglected Washington's appeal not to cut output rates. The decision of major oil producers to cut crude output rates by 2 million barrels per day caused an abrupt response from Biden's administration. Washington called the decision short-sighted. Oil prices went down following a three-day rally. Nevertheless, prices remain at the highs since mid-September. Brent futures slipped 0.05% to trade at $93.35 a barrel, and the WTI futures shed 0.04% to trade at $87.72 a barrel. The crypto market is poised to enjoy a brief jump. Cryptocurrencies were gaining ground in a confidence in the early American session. Bitcoin climbed 1.3%. And altcoins are trading higher in parallel. Ethereum grew 2.33%, Solana, Ripple and Litecoin printed modest gains. If crypto assets retain optimism of the pre-market, Bitcoin will be able to surpass $20,300. In turn, the token will rise to $20,500. Otherwise, the flagship crypto could be trapped in the range between $19,800 and $20,300. It seems that financial markets are set to trade under higher volatility for long, so investors' nerves could be frayed in the coming days. Make prudent trading decisions and see you online tomorrow.